Okay, I'm going to walk you through this presentation of how to hire accounting and finance talent that drives our ROI. And we're going to talk about how to map personality to a job to increase performance. But I'm also going to talk about like how I discovered this. So first, let me kind of show you what's in it for you. There's a growing divide between the haves and have-nots in terms of talent. So you're going to read a bunch of stats out there about talent. Everybody knows that it's important, but let me try to quantify it. Whenever your employees are engaged, they're 125% more productive than people who are just satisfied. That's according to Harvard Business Review study. Your company will be 30 to 50% higher in terms of operating margin than your industry peers if you had the best talent. This is based off of what's called operational maturity metrics. In companies that are really healthy in those operational maturity metrics, these are all quantifiable. It's like, do you have a system that is written down? Is it being monitored? Is it being improved? That kind of thing. And only good employees can implement that stuff, right? So your profit will be literally 30 to 50% higher. And so that's part of why we look for really great talent. To turn that into some numbers for you as a business owner, if your business is doing $5 million in revenue, you've got a 10% net profit on average. By having poor fit employees, it'll cost you about $250,000 per year in cash flow. And so for most businesses, that is worth about $1.25 million in equity value. Just let that sink in. Those are real numbers based off of where businesses actually sell. This is the actual cost that has been calculated to be incurred from having these poor fit employees. And if you think about like all of the things that you've had to deal with with your weaker employees, like all the time that you have spent trying to fix things that are sort of broken rather than working on opportunities like selling things, improving your product, spending time with customers, and just doing your normal work rather than just, putting out a fire, you know in your gut that this is true. You could easily make that. So here is where it matters the most. It's not just a one-time event that you're getting this tax basically placed on you from bad employees. It happens every single year, and here's the real point. Whenever you can reinvest that cash, that $250,000 back into the business, in a business that is performing better and has higher return on invested capital, that creates compounding over time. That it might be a difference of 5% per year, but guess what? Over 10 years, I haven't done the math in a while, but I think $1 invested over 10 years might turn into like at a additional 5% return. You might end up compounding your money at, what's the doubling time on that? That's rule is 72, so it's like 13, 14 years, right? Yeah. So that's just an example, and it moves much faster whenever you're going really well. Things are going really well. Okay. The reality is that companies with the best employees win, period. You kind of knew that was coming. Here's the real problem. Most entrepreneurs are competing in markets that are just as competitive as professional sports, but they have no formal training in how to attract, hire, train, and retain A-level employees. This is even worse. Most entrepreneurs are not experts in finance or accounting, so they struggle to clearly identify the qualities that they're looking for in a great bookkeeper, accountant, controller, or CFO. And so what happens very often, I see this all the time, I'm sure that Chris and Stephanie see it as well, they'll conflate accounting people with finance people because the role just works with numbers. So a lot of times whenever you see a job posting where it's like a CPA is required for this role, but then you'll look at what's actually in the job description, it's not a lot of deep accounting work. It's like some bookkeeping, and then it's crunching some numbers in a spreadsheet. It's not actually like deep gap accounting work where it's just that's their filter to know if somebody knows numbers, right? And so you end up losing The people who, like in finance, you don't need a CPA to be really good at finance. The best finance people that I know don't have CPAs. So this causes people a ton of confusion, and that's what I'm going to solve for you today. Is you're going to be very clear on what it is that you need in your organization to be able to not only just take care of the accounting task, but also turn this into a high-performance team that gets you from this reactive cost center sort of thinking with your finance and accounting department to a more proactive investment in your business where it drives a return. Okay. So let's talk about how analysts are different from accountants. And they're as different as cats and dogs. This is the number one. Why am I saying this? This is the number one misunderstanding in the world of hiring for accounting and finance talent is people don't understand very well, and we've not, as a community in the accounting and finance, have not educated people very well. What is the difference between an accountant personality, and I'm saying accountant broadly, and a financial analyst kind of personality? And once you make this distinction, it's gonna click. You're gonna realize what you're looking for. This is gonna save you a bunch of trouble. So you can see in these charts over here, on the top, you've got how people engage others. Do they follow or do they lead? So those are two kind of quadrants. And then what do they do with their environment? Do they seek to create it primarily, or do they seek to control it primarily? Creating and controlling is one framework that you can think about in terms of how people like to engage the world. And this is based in their ingrained personality. This is how they are wired. And so you want to if you want somebody to really succeed at something, put them in something that God put them on earth to do, right? Accountants tend to control their environment, and they tend to follow. Those two traits tend to go together. This is more of like a need for perfection and a need for control, and they don't like a lot of change, right? And so implementing change within an accounting department, you've probably found, if you've done this long enough, is kind of hard. Once they've got a system set up, they don't like to change it because it works. The analyst is a person who's more entrepreneurial, basically. They like to create their environment. They're very comfortable with ambiguity. They like change, and they like to lead, typically. Not all of them, but this is the typical analyst personality. Their preference would be to be a little bit out in front. Maybe not be the front man, but like be in that leadership kind of realm, right? And it's because they think about the future. The accountant kind of thinks about the past or the present. They're less concerned about building things and building this big empire, or like, creating this new thing. They're more thinking about, how do I organize what's around me? So the focus of the accountant is more towards the past, like I said, and it's more black and white. And then the analyst is more future-oriented, and they see more in shades of gray. Make sense? So just to summarize these traits, accountants' desired traits is more routine, more repetitive tasks, highly organized, cares a lot about the details, knows the rules and follows them. They enjoy rules. They're great at task management, cares a lot about the customer and the business, but they don't necessarily see the bigger picture all the time. And so this is where the entrepreneur, who's the driver pusher, who expects everybody to kind of see the bigger picture, that's where they get at loggerheads with the accountants. Super, super normal. Analysts, they like variety in the projects. They're creative problem solvers, the best of them. They're focused on big picture and how things fit together. They know the rules, but they're also very interested in when to break them, because they like to kind of break some rules sometimes. They're more results focused than process focused over here with the accountants. They care a lot about the customer and the business. This is what you want in an analyst. Okay. This is the perfect archetype. There are people who are kind of hybrid in between, but you're going to get, if you build a team, you want people who have really strong strengths if you have a big team. If you're a small business, you're just starting up, you probably want more of a Swiss Army knife, who's somebody in the middle. So know that. So this is based off of measurable traits that there's been a ton of research on. There's tons of tools out there that will measure this. The tool that I have been trained on that I got a lot of this from is Culture Index, but there's predictive indexes out there, and then another tool that we have started to use because it's a little bit more granular and helps explain certain things that is not captured in Culture Index is a tool called Principles U. It's created by Ray Dalio, who is the CEO and head of Bridgewater hedge fund, which was the largest hedge fund in the world. He started it from nothing. So very, very competent guy. Used this to build Bridgewater to become the most biggest hedge fund in the world. So we really like this stuff. But basically, need for autonomy is one of the big measurable traits out there. That's like the desire to control your own destiny and to either lead or follow. Think of it like that. Extroversion versus introversion preference. Everybody kind of has heard about that by taking like Myers-Briggs and stuff. But are you more people focused and story focused, or are you more thing focused and data focused? That's how people organize the world. It's two paradigms. Pace and patience. So people who have high pace and they want to get things done very quickly. They're kind of seem impatient. They need a lot of variety in their work. People who are higher in patience, they will perfect a process slowly over time. They're going to take their time. However long it takes to do it right is how they're going to do it. And so, that's one of the reasons why entrepreneurs who are high pace bump heads with some accountants who are a little bit more patient and want to get it right. And the need for perfection, this is the need to just nail the details, pay attention to everything so that people know that they're doing it right. It creates order out of chaos, but it's also one of those things where it creates analysis paralysis, makes people struggle a little bit with ambiguity. So lower need for perfection is associated with people going out and doing some stuff and breaking some eggs. And then also people have been able to measure logical and emotional decision making. But these top four are what we're really looking for. Okay. So this is from Principles U, and these are the big personality types that we call them the archetype archipelago. And you're going to see some trends here. So where great accountants live is typically they are more producers. They're very determined. They're reliable. They have a little bit of toughness typically. So these are typically where they live. And they kind of be all over the place in terms of caring and leadership. Where great CFOs live, it's more of a, notice a lot of toughness and to push through to get the results. And so there's also a forward-thinking nature where they take leadership roles. And ideally, depending on the role, you want somebody who they can be more reliable. But there are CFOs who are more like they're conceptual, big thinkers, not as reliable, but like whenever they come through with an insight, it's like game-changing. So that's kind of where they live. And you've seen people in the past. So bookkeeper, a really good bookkeeper is not going to want to lead the company. They want to be told, hey, here's your job, do this. And they're going to have a whole life outside of work. And that's going to be okay. And they're going to work for you for 10 years. And they're going to be kind of introverted. This is, in some organizations, you need somebody who's a little bit extroverted. So this is one of those things that depending on the role, you want to move around. Pace, patience. This person needs to be at least in the medium category, if not a little bit higher. If they're super, super patient, then that can create issues, so watch for that. And then need for perfection, they need to be a little bit higher than average, and that will typically lead to good results. If they're super high here, it can cause them to get bogged down and not see the forest from the trees. Logical versus emotional decision making. They just need to be logical because they're going to be solving some issues and some problems. So, like I said, the technician or the implementer is a great personality type for that. Their technicians are structured. They focus on efficiency and reliability. They're good with facts and details. So, implementers also good at following through, dependable, reliable, orderly, and they follow the rules. Accountants and controllers, you'll see the need for autonomy go up a little bit. It's kind of medium. And they will typically tend to be introverted, but I have seen controllers who are extroverted, and they can be really helpful if you have to communicate a lot of data to a lot of people and wrangle a situation. Their pace is typically medium to high in terms of patience, and the need for perfection is high or above average, right? And you want somebody who's pretty logical. So protector or enforcer is a great one to control an organization that's kind of existing. If you need a controller to build something, that profile is a little bit different. But protector is about order and discipline. They have very strong sense of duty and responsibility, meeting commitments. They're very honest and forthright. Enforcers also about accountability, telling the truth. They're hard workers. They can meet their commitments, and they're pretty objective. So very similar personalities between the two. Here's where we start to shift, is that financial analyst has a need for autonomy that's pretty high. It's like slightly above average is a pretty good spot to see for an analyst. Typically they're introverted, but there are analysts who are extroverted. This is the introversion and extroversion thing is more about the ability to like sit for long periods of time in front of a spreadsheet. So that's why we typically show introverted. Pace or patience can vary depending on the role, but their need for perfection, you need somebody who's like not low attention to detail typically. It can be medium, middle of the road, or it can even be higher, but somebody who's very low in attention to detail is going to struggle. But you want somebody who's logical. So the investigator, the strategist, or the planner are the people who are the best. And I'll just kind of zoom through here. You guys can pause on any of these as you like. For CFOs, you really need somebody who has a sense of themselves and wants to lead, because they are going to be leading part of the organization. You can't have somebody who is more of an order taker in that CFO role, because part of their job is to be like, hey, CEO, you're nuts, and we're not doing that. Sorry. Because that's what actually keeps the CEO out of trouble a lot of times. As much as it's frustrating for the CEO whenever it happens, they a day later, they appreciate it. They're typically introverted, but they can be extroverted. Pace depends on the role. A little bit of like, let's get this done. I'm tired of waiting for this is for, a lot of organizations is good to have. Depends very much on the organization though. And the amount of workload that needs to happen. Smaller companies benefit from that. Bigger companies, the CFO can take their time. Need for perfection is going to be medium to high typically. And they've got to be logical. And so the commander, the shaper, or orchestrator, or planner kind of archetypes from Principal U is what we typically like to see in those roles for like great fit CFO. There's others out there. I would, and don't use these tools to like screen people out too much. If somebody's close, I would, the tools can be wrong, but the tell is like you use the tool, you kind of like interview them and talk to them, and they seem like the person that you think that they are. Like how they interview matches with, what you're reading on the paper, and like that seems like it fits within the organization. You just got to apply some judgment to it. But the commander they want to set some high goals. They want to achieve results. They're good with managing complexity. They do like discipline and order and efficiency. This is also a personality type for like a COO too. So just think about that. Shaper is more visionary. And this is more like the strategic CFO kind of personality type. They like setting priorities, but they want to hold others accountable. They don't like necessarily need to be the one who's doing all the work all the time. The orchestrator also, again, they're detailed, precise. They set some high standards, and they are really good about managing people towards a goal. And then the planner is they're collecting information to make sense of it. They're creating backup plans. They're basically making sure that stuff is getting done and everything is reliable, and they're thinking ahead. This is, again, kind of also a COO sort of personality type. So those are the personality types. Why did I create this? I'll go back to the beginning. We're interested in building very large, valuable businesses. You can't do that without great teams. And so part of what we're fascinated by is right person, right seat. And in the way that we came up in this world was through accounting and finance. And so we think a lot about not only like what's the right acquisition for our clients and like how do you make that work and finance it, but we also think once you've bought it, what's the right person, right seat kind of situation? What's the org chart need to look like? And who do we need in there to make the business really grow quickly? And we apply this to every position in the company, and starting from the top down. And usually, like one or two changes in that org chart lead to really big improvements in performance. And so that's kind of how we got here. It's a tool that we've had in our toolbox for several years now, but we're starting to really see it compound in value, and so that's why we talk so much about it. So hopefully that helps, and thanks.